right room. Tara, if you're ready, you have the floor.
Sure. I'm just now having issues, but, well, welcome everybody. Thanks for coming back from lunch. I really appreciate that. I've talked to many of you and learned of the different ways you're adapting. I've even used some of those in my office, and so I appreciate all of your hard work and impressed but not surprised, as many of you have dealt with immense change before. And all this is very different change. You and I both know that we're going to get through it. Our office is doing the same with our new local government director jumping in. If you got on the call early, you heard some of that change. She's jumping in, and even going to give this presentation, and she hasn't even been through a settlement before. But her name is Kim Diller, and several of you guys got a chance to meet her during our informal meetings the last week of April. And for those who don't, you're going to get a chance to meet her real soon. She is formerly the CFO for IDEM, which is the Indiana Department of Environmental Management. And before that, she worked for local government, the County of Marion and the City of Lawrence. So she's familiar enough to probably get herself in trouble. But definitely appreciate your patience and any suggestions that you might have for her. She's super smart, and I am excited that she's on our team. Another important announcement I wanted to make, we have said this before, but we are in the process of transitioning the abstract approval process entirely to the DLGF over the next few years as they begin to fully utilize Gateway. We still plan on playing an integral role during this transition, and also plan on keeping our consultant, which is currently Crow, to ensure that the right checks and balances are in place and we're confident in the transition. We're continuing to review processes always, all the time, and procedures, and making sure they align with state statute, and we're making changes along the way. Most recently, we excluded the auto rental excise tax from the state excise tax allocation because of this review. Of course, we thought it may have just been overlooked when the excise tax allocation was created, so we notified the state budget agency to address it in the most recent session if they wanted it to be included in the calculation. And we thought they would just, go get that changed. However, there was no change to the statute, and as a result, we've excluded it from the state excise tax allocation. It makes the calculation a little more difficult, but it does result in a little extra money for local government. But I apologize for the surprise that this was, as it should not have been. The timing kind of snuck up on us because we were waiting for session to end, assuming that there would be a change in the statute. The session ended right around middle of March with no change. Then we had the unexpected staff change, and Kim started with us in the middle of March. And then COVID began filtrating everyone's thoughts and trying to determine how to get people to work from home. So really, as we were throwing everything together, we realized that we needed to make this change to the state excise tax allocation worksheet. But I appreciate the patience that you've had with us and the suggestions to make sure that we're implementing this change in the most efficient manner. I know a little bit was talked earlier about the $300 million that the state has set aside for the Coronavirus Relief Fund for local government reimbursement. As it relates to the pandemic, it's very important for you to be tracking all of your expenses to see if they could potentially be reimbursed from this. The forms, as stated earlier, are on the Indiana Finance Authority website. And if you need any assistance at all, don't hesitate to ask the Indiana Finance Authority, because I believe that their purpose is to try to get that money to you as quickly as possible. Last but not least, I think we should probably talk about the budgets we're going to be facing over the next few years. Oftentimes, county councils will rely on you for revenue estimates and budget recommendations. In fact, it's actually part of the law where the county auditor makes the budget revenue estimates as well as recommendations. So don't shy away from digging into those budgets and coming up with some ideas of your own on ways that you can save money. A few things to think about might include if you're one of the counties that recently received a supplemental lit distribution, trying to hang on to it to supplement the local income tax in the next few years when we do anticipate that it will drop. And each county will have a different drop, but some may see significant drops. Use conservative estimates for your revenue when you're setting your budget for the next few years. It'll be much easier to make the tough decisions now than it will be in the middle of the year if you need to make those cuts. If your revenue ends up coming in higher than anticipated, you could spend that money on one-time expenses if you need to, or you can continue to save it until at least you come up with a more stable predictability. I think it took us, we were in a bull market for, gosh, over 10 years. And so finally counties were in good shape, I would say. But it won't be easy. Many of you, this will be the first time you're going to go through severe budget cuts. And then a few of you have been through this through 2008. And then for local governments, we had a huge income tax decrease because of a state error in, I think, 2004. So there was another major cut during that time. And so if you've been through it before, help those who haven't, give ideas, and be there and be ready to give your council some ideas to make some of those changes. There are several ways you can look at expenses, starting with your community's priorities and also looking at what operating expenses have been added in the past few years that may not have been statutory. We're in the same boat. Just received a memo probably about 15 minutes ago saying that we need to cut 15% of our budget for next year. And that was the budget that's already passed, but the state is on a real-time basis for both our sales tax and income tax. So we're going to have no choice but to cut 15% starting this month from everybody's budgets. And so that means that if there's local programs, you guys should be on the lookout for cuts from the state as well. I hate to say it. I don't have any of those programs, but those may also impact you. I'd be willing to take questions if anybody has them. Otherwise, I want to turn it over to Kim, maybe Janie, for the rest of the presentation.
Good afternoon. Thanks for joining us this afternoon and letting us kind of crash your party. I am Kim Diller, and I have gotten the privilege of working with a number of you this past couple of weeks as the settlement forms have been released and some other communication has come out from our office. And I really appreciate your patience as I transition into this role. It's been a while since I've been in local government, so things are rushing back to me, and probably not as quick as I would like it to. So I really appreciate your patience as we go through those. So I'm going to share my screen, and so that we can go through the slide presentation. So as I said, I'm Kim Diller, and then of course you all know Janie, the fabulous Janie Cope, who is the star of the local government division, and I have grown to completely rely on her. So and there's our phone numbers, our contact information. Of course, you can always contact either one of us directly, or you can go to the local government email address as well. So today we're going to talk about the settlement forms that went out, kind of go through those forms, and then just talk about some of the changes. Tara had already mentioned about the change in excise, and that's probably the largest part of the discussion. So the excise change for 2020, this was presented to you probably the clearest way on the form, and then we had to for the SWETA calculation form, and then we had to revise that so that it made it even more clear based on a number of recommendations that I got from all of you. But just to kind of reiterate what was already stated, the vehicle sharing excise tax was passed in 2019. So when that was done, there was a review of the statute and how it impacted the settlement. It was determined that the auto rental is not included in the SWETA calculation. Only motor vehicle excise tax replacement aircraft excise tax and boat excise tax should be included. So we did revise that form. I'm going to walk through that form in a little more detail when we get to that point. All of the forms have been posted onto the FTP site, and we'll go through that as well on how you access those documents and how you can access the FTP site. And then also we sent out a kind of an instruction manual, and that's posted there as well. And it just kind of hopefully answers the majority of your questions as you go through settlement. But of course, if it doesn't, or if there's anything missing, please let me know and then we can update that. There's a checklist. That's probably your most useful tool as you go through settlement. The checklist is posted on the FTP site. Crow, we have contracted with them to do the initial review, and then we're going to do a final review. And then once that happens, if everything looks good, then we're going to, Janie or I will email you to let you know that it's been pre-approved. And then we'll post an e-signature form onto the FTP site. And then you're going to take that form, you're going to sign it electronically, and then post it back onto the FTP site. And then once we have that, then you'll get your final approval once we get that form, and then also once all the funds that are due to the state have been remitted to AOS. And that must occur before June 30th. So the AOS FTP site, the address is listed here. If you don't have access to it or you're having difficulty logging into it, please contact Janie or I, and we will make sure that you get access. Or if you have other team members on your staff that you would like to have access to the site, we can do that as well. So just let us know. So when you go in, you'll see these folders, and the from settlements, those are the forms that we have posted for you. You're going to download those forms, fill them all out, and then you're going to put them in the to settlements folder. And that's how you're submitting those documents to us. And what will happen at that point is that Crow will pull those off. They'll do their initial review, and then they'll send that review over to us, and then we'll do a final review, and then we'll contact you. So we're just I'm going to attempt to go through these settlement forms as I'm trying to become a little more familiar with it as we go through. I'm learning every day. So I may have to rely on Janie to kind of help a little bit as I go through this. The County Form 17 TC, this is your Certificate of County Auditor of Tax Refunds. So this is the form that you use to list the refunds. This is required at December settlement. It is not required for June. However, it is optional, and if you are doing refunds during this settlement, I would encourage you to go ahead and fill out this form. There, for each taxing district, there's a tab for each one, and that's where you're going to list each individual taxpayer and their individual refunds. And then there's a summary tab that adds it all up for the county as a whole. And this is why I would encourage you to use this. You're going to reconcile that form with the Form 102. The amount that you have refunded to taxpayers is listed on that Form 102. So when we go through these reviews, we're looking at these forms. This is what, when I go through this and talk about reconciling the forms, we're looking at that to make sure that everything matches. So it's helpful for you to go ahead and do the 17 TC if you do have refunds, and then that way we have that to match. The excise tax allocation. So this is the one that this is the only form that has had a change this year. And it is because we decided that we wanted to break out the various excise taxes that are included in the SWETA allocation to just make it more transparent. But then we did do a revision to add on the other excise taxes so that we can kind of have a grand total on one sheet. So I am going to attempt here to just open that sheet just because I really want to make sure that this is clear. Thank you for your patience as I figure this out. Okay. Okay, so this is the sheet. And you'll see on the main tab, you're going to choose your county. And then you have your motor vehicle excise tax, the boat excise tax, the excise tax replacement credit, and the aircraft license excise. You're going to fill in all of those for each of your taxing districts. Then it's going to total that. That total there is only the total for the excise tax that is included in the SWETA calculation. So once that total is calculated, it adds all those up. You have your total there, and then that is used to do all of these various calculations for the different deductions that are going to be submitted to the state. And so that, what the column in here, this after SWETA 2009 welfare excise tax allocation and 2009 school excise tax allocation deductions, this is how much is available for distribution from just these excise tax types here. Then we added these additional columns for the other excise tax types that are not included in the deductions. So this column R adds column N to O, P, and Q. So then this is kind of your grand total excise tax distribution for all of your units. I thought it was helpful, and a number of you told me it was helpful before I came up with that idea. But this way we can actually see it all on one sheet, and you have a grand total that you can reconcile and that you can show that this is how much is going to be given to each unit. So that's the biggest change for this year. So I'm going to switch back. So yeah, I think I've covered all of that. The next form is the excise tax reconciling form. This is what you're going to use. And Janie, if you could talk a little more about this form, because I'm not quite as familiar with it. You're muted, Janie.
Yes, I am. Some people wish I was muted all the time. Let's see. Let me get to that sheet. I'm going to try to bring it up on my other computer. Basically, the excise tax reconciliation, the purpose of that is to verify the treasurer is always going to show more funds. Yes, dear? Oh, okay, sorry.
Are you trying to share?
No, I'm trying to mute. And we all know how good I am at this.
Here, how about I mute you? I unmuted you.
What does she want to mute for?
Kara, is that better?
Yeah.
I'm still here.
It's like we were getting feedback, like you had a call in and
It's
And
because if somebody else is on, you're getting the feedback from their computer. So we're trying to mute everybody and only have the one talking unmuted.
Okay. So basically, when the treasurer certifies their collections for all the various types of excise tax, and they put it on the 49TC, what you're going to distribute is almost always going to be less. And so this form was created, and if you follow the definition, which is on the second page of the form for each item, you're going to start out with that first line should be exactly what the treasurer certified. You do not want to mess with that number just to make it work. You want to make sure that that matches what's on the 49TC. Then item 3, the excise tax to be distributed. That's how much that you, the auditor, are showing that you're going to distribute. Obviously, there's going to be a difference. And that, the different lines on that form, without having it up in front of me, is accounted for you have a cutoff date. Treasurer received more money after that cutoff date, and there's a line in there for what did you receive after the cutoff date. Treasurer reported it, but you're not distributing it. That would obviously be a reason for a difference. And those are the kind of things. But if you just follow the form, or if you get stuck on something, feel free to contact us and we can help you with it. Or if you've got any questions now, be happy to help you. Now, the goal is, of course, no difference. You just want to make sure that you've reconciled it and that at the bottom it's 0. The one thing that, if it's not, as the slide says, if not, you need to be researching that and try to find out what happened. Why is that different? And sometimes it's just simple things that the auditor included that maybe shouldn't have, or the treasurer included that maybe shouldn't have. There's just all kinds of things, human error and other processing issues. So, but you can usually, if you dig back, you can find it.
Hey, Jenny, we do have a quick question.
Okay.
Is the motor vehicle excise tax and motor vehicle lottery cut supposed to go in the same column?
No, the lottery cut, what used to be referred to as the lottery cut, we refer to as the excise tax replacement credit. So that amount goes into the lottery, or I'm sorry, to the excise tax replacement credit column. And then the motor vehicle excise tax will go into the excise tax column. Does that make sense?
Okay. Hopefully. Is column R cashiered in by the treasurer? This might be the Excel sheet.
Well, the treasurer should have been, you know, as they received the money, they should have been putting it on their cash book. Or maybe I'm not following the question.
Right, well, you can continue on, then maybe they can expand on it if they need to.
Okay, that'd be great. I do have a pun for everybody, but not right now because I shut down my other computer. So we can go on, Kim.
Thanks. So the 49TC is completed, she said, it's completed by both county auditors and county treasurers. The purpose of this form is to, for the treasurers to report what they have collected for the county in taxes and certified taxes, and then the county auditors to report what is going to be apportioned and distributed. It's also used to calculate settlement of the property tax relief. So on this form, the county treasurer will certify tax collections in the first 5 columns. And then they will also list other collections. So these are other fees that have been collected outside of property taxes that will be distributed. And then the county auditor will complete columns 5 through 12. So what you enter should reconcile with what the county treasurer has entered. And then any differences are reconciled on the Quietus worksheet. So on the 49 TC, we're going to reconcile this to the Form 105. So your total current and delinquent tax penalties and interest distributed should agree to Form 105 net tax penalty and interest column total on line 7 or line 43 of the total net amount for apportionment. Column 6 of this sheet of the 49 TC, property tax relief to be distributed should agree to Form 105 net tax penalty and interest column total on line 9 for the total net amount for proportionate. And then column 8, the license excise tax distributed should agree to the Form 105 on line 7. And then column 9, the total distributed should agree with the total on your Form 105. So again, this is just something that we're going to be reviewing, we'll be looking at, so just make sure that your totals on this form match the totals on Form 105. The Form 102 is the apportionment sheet. You're only going to, for June, complete sections A and B. A1 is completed in December. Section A calculates the total amount available for apportionment for each individual taxing district. So the County Form 102 is used for each individual taxing district. This should agree with your Form 17 TC for the refunds. Section B calculates the total funds available for apportionment by fund. Then the 105 is the settlement form. So all of the information that you enter onto the 102 is kind of added up into the Form 105 for the total county. And Section A should agree with 49 TC. Section B, again, is for the whole county, and it's by fund. Section B totals should always match your Section A totals. Then the Quietus worksheet has 5 tabs, and this is going to be used to reconcile any differences that you had between the treasurer's and auditor's cash books. And Janie, I'm going to hand this back over to you so you can walk through the more detailed, this is probably the more complicated form, maybe, of the form. So I'll hand this over to you.
There we go. Okay, this form we created a few years ago, and it's basically just to help the counties with, okay, when I've done all my quietusing and I don't balance, something still doesn't balance, we found that this form actually helps. The first two tabs are the property tax and the excise tax. The property tax, I mean, basically we have some fund names already entered, but you can enter, because each county is a little different, you can enter your own fund numbers or fund names. I don't recall if we have a place on there for your fund number or not, but once again, all this information comes off of your Form 105 in Section B, the gross property tax minus advances minus exam of records each equals the the net property tax for distribution. And we do the same thing with the excise. And when you get through with these two sections, it should match your 105, right? Because you're going to put in how much was distributed to each of those funds. And then, of course, once you calculate that, what you're actually going to distribute out is you have to back out, and you do this on your Form 22, you back out the advances and you back out the exam of records. So that follows the same thing. And Kim, if you want to switch to the next slide, the additional property tax, that is anything on collected. It's money that was collected, but it's going to be allocated out to a separate fund. Typically, you don't see very often overpayments anymore. I can't think of the last time we saw those on there. If you are backing out from settlement the amount for your non-sufficient funds checks, and because when that happened, County General had to pay out to cover that check, because treasurer always has to balance with the bank, you're going to enter that as an adjustment. Your tax refunds go in here because the county paid that out ahead of time. So this is the way that the county recaps, the county general fund recaps that money, and that's based off what's on the 17TC, and the same way with the exam of records. And what's going to show up on that worksheet for exam of records should agree with what's on your first property tax sheet. And a few years ago, we added where are you going to receive that money in at the county. And so the one point that I want to point out that seems to cause trouble is the balance of the property tax relief. That's the last line on there. On your 49TC, if the total in column 12 is a negative, then that means that you're actually not going to distribute everything out to the counties of what you certified to the treasurer. So you have excess. So you want to put that money back into your lit PTR fund so that next year that can be used, or it's there to be used in December when you do the reconciling for the year. Any money put back in the fund is used towards the next year's calculation of the PTR rate, and that was a whole mouthful. But that one, and we'll have that on another sheet as well, seems to cause a lot of balancing issues then when you get into abstract next time and we're looking at the balance of your fund. So, very important. Okay, Kim. Next one. Then on the treasurer's cash book, pretty simple. You just list what the total property tax that the treasurer listed in column 3 of the property tax, and you back out the property tax advances, you add in the late payment penalty and special assessments. That's going to tell you how much treasurer has for property tax to distribute. And then you've got your, and what I was talking about before that last slide, if the balance of the property tax relief in column 12 of the 49TC is positive, then you're going to have to give the treasurer more money out of the PTR fund. I know that's not on the slide, but it is in the instructions. And next one. Then the additional quietus, that's all of those additional funds Kim went over. That's in the treasurer's part of the 49TC for all of those additional collections that they had. Now you're going to need to receipt that into specific funds. This is just a sample of some of those that could be there. It's certainly not all-encompassing, and once again, on all of these, we've got some areas where you can enter in what the money's for, and so that way you can keep track of it. And then next slide, Kim. Oh, so anyway, I was going to say at the front of that, it's all of the Quietus worksheet, just like we did on some of the other reports. It's going to, like the 17TC, everything that you enter in on those worksheets combines, and it shows you on the very first page how much you should be receipting in, and between you and the treasurer, and if you balance. And that'll give you an indication if something's entered incorrectly or if there's a problem. And that's it, Kim. It's all yours.
Thank you. So we covered a lot of information in a very short period of time. The idea was just to kind of briefly walk through the forms in case you weren't familiar with it, but also sometimes it's easier to hear it than it is to read it. And so hopefully this was helpful. One other item that I did want to mention is that because there was that extension given by the executive order from the governor that people can pay their property taxes up to July 10th without penalty, you may find that you have more property taxes that are not available for the June 30th just distribution. And so if that's the case, I would strongly encourage that you do advances to your units after that July 10th date before December, because some of your units may be strapped for cash. So if you've never done an advancement to your local units before, please reach out to me and I can assist you with that. And yeah, that's all I really had to say on that. So thank you guys so much for your patience, and I'm really looking forward to learning a lot from you as I work with you.
Hey, Kim, we do have one other question.
Okay.
Does the treasurer or the auditor start the reconciling form?
Start the form?
Mm-hmm. Yes.
I don't think it matters.
You're talking about the excise reconciliation?
I believe so, yes.
Okay. It really doesn't matter. It's up to you. I mean, just whoever starts it makes certain that that line 1 amount is exactly what the treasurer certified. We've not really, I don't believe we've ever specified who actually starts the form, but then again, it's up to the auditor to make sure that everything balances.
Yeah, and I'll just add to that because I know because it doesn't matter. Some auditors will start it, some treasurers will start it, and so you find yourself in that position. Whenever you do start a form, if it's the treasurer's number, have them initial and date it. That's how we just used it, because you would get different versions of the form, and if it's after a certain date, then the amount of money could change. So I just think, and then if you have to start over or re-sign theirs, but just use the latest date that you have, and make sure you're putting a date on that when you are putting in your number and working with your treasurer on. Well, Kim, I thought you did a fantastic job with never doing a settlement before. We should take volunteers to see if anybody will let my team come in and do a settlement from scratch, because I can guarantee you, if you volunteer, it may take longer, but I think they would be able to understand more of where you're coming from and what you're saying. So in the future, we might try some of that. But Kim, I think you did a fantastic job never doing that before. So.
I think you're already getting volunteers.
I think you're already getting volunteers. We do have a welcome Kim Diller from some auditors. I thought it was required to do an advance after July 10th, but before August 31st. So is that statement not true?
I'll take this. You are not required to do advances. However, we're strongly encouraging it because you may collect most of your tax after your cutoff date for June settlement. And the whole point of a settlement is to get out the first installment of property taxes. And if people don't pay their first installment until July 10th, you really need to figure out a way to get that out. So it's not required by law.
Of invitations to come out and do their settlement, we'll send them to you.
Fantastic.
Okay.
I don't think we have any more questions on our end.
Okay. All right. Thank you so much.
Thank you.
Thanks, Janie.
Thanks, Tara. We appreciate it.
I did want to mention real quickly that we have 4 counties settlements approved as of today. And also to let everybody know that FIT is coming up and will be distributed on time. Get you some more money. That's all I have to say, unless you guys want to hear a really bad joke.
Go ahead.
Okay? I just looked this up. Okay, what happens to a frog's car when it breaks down?
A frog's
It gets
car.
towed away.
When it breaks down.
It croaks?
Uh-huh. It gets towed away. Oh. Okay, here's a Jim Carrey joke. I submitted 10 puns to a joke writing competition to see if any of them made the finals. Sadly, no pun intended.
Oh.
Aww.
You bet.
What's the
You
difference
get better
between
material,
a
Jamie.
football? Okay. Well, I like these puns. Okay, I'll let you go now. I won't make you suffer anymore.
Well, we appreciate it, guys. Thank you so much.
Thanks for everything.
All right. Thank you.
All right, you're on.
I am on. So we're going to do mine and then you do the...
Go ahead, do all of yours and then I'll.
Okay, it's back to me. We're up to the presentation on the annual financial report form, the frequently asked questions. I'm going to share, I think. Oh, it's the right one. Okay. Most of the material that we're going to talk about on this is based on questions that either Ricky and I received this year while you were completing the AFR, as well as feedback from our field staff that examined the AFR earlier in the year. as you know, there were changes in the AFR for 2019 that were hopefully going to move us more towards the enhanced regulatory report, which added information to the traditional regulatory report that we have always had been using. We are going to focus on some of these changes in this presentation. We had planned to audit those changes in 2019, for 2019 and 2020, but as you know, COVID reared its ugly little head and things got complicated. We started doing the remote auditing and it just seemed there was too much to add all of those changes to the audit. And so the board made the decision to go ahead and continue the 2019 audits from that point on to be based on the standard regulatory basis that you're all used to, instead of going to the enhanced regulatory for 2019. However, the changes are still in Gateway, and we will be doing your 2020 with those changes. So we're going to go over those because there were some hiccups with that. So this year, and if have not had your audit completed at that point, they were going to show your financial statement with the old basis, which was the beginning balances, receipts, disbursements, and ending balances of all the funds without all of the detail in the financial statement itself. It's still going to be a supplementary schedule. Okay. And then the additional notes that we were going to have for debt schedule, leases, and transfers, those are not going to be included in the financial statements for 2019. This also means, because we are deferring the changes for 2020, that moving capital assets and depreciation into the financial statements will not occur for 2020. So you can heave a big sigh of relief on that. It gives you another year to work on those before you're actually going to be audited, and we're actually going to place an opinion on those. But you still need to work on them. It's a deferral. It's not gone away. You're still going to have to put that information in the future. So when we come into audit, one of the first things we do is we look at your financial, annual financial report, and we look to see that it ties to your prior period reports. So the ending balances of your funds actually roll over in Gateway to become the beginning balances in the subsequent year's report. However, if you upload, which most of you do, your financial data from your software, those beginning balances on your financial data will overwrite the rollover balances. So you should always check your beginning balances against your last year's financial statements that were in your audit report and determine if any of those changes are significant. And by significant, I mean more than a few dollars or some rounding differences, things like that. If you find a significant balance, you do need to determine which amount is correct. Was last year's ending balance or this year's beginning balance? And the next step is to determine why that change occurred. The most common is you've made a correction in the current year that affected data in the prior year. But there are other reasons it might happen. If you need any assistance, if you find this and you need assistance with this, be sure and call Ricky and I. We'll be glad to help talk you through it, what needs to be done. And then if you have determined that your beginning balance is correct, what has been uploaded really is the correct balance, keep all of that information for audit so you can show it to them. If it is material, it may need to be restated, but the field staff will help you with that. If that will give you guidance on that if that happens, so just keep the explanation. One of the reasons for using the Gateway application is that it allows for comparability between the different units' financial statements. This information is then available to the public, so your citizens, the General Assembly, people doing research, all have access to this, and hopefully cuts down on any direct requests they make to you for information. The problem is if the data is not comparable, the process doesn't work well, and they will generate probably more work for you. The chart of accounts was developed for counties to provide that standardization of county funds. There are funds that are the same fund from county to county, but might have a different name depending on what your custom or history has been with that. But since they are the same names, we want to use the same fund for that, and that's where the standard chart of accounts comes in. It gives you a fund number for that. So for example, you can have one county might call it county highway, another might call it MVH, another might call it motor vehicle highway. They're all the same fund, they just have a different name. Make sure you find the standard name within Gateway and use that for that fund. If there is a standard fund available, please use that fund and don't create a custom fund for that. If it's a statutory fund, if it's in the chart of accounts within those 2000 series, it is a statutory fund, there is a fund number for it. So use the chart of accounts fund number. You have the ability to create custom funds, and those are for your local funds that are unique to your county or set up at the county level. Your grant funds, as new grants come in and you're putting those in separate funds, capital project funds, debt service funds that are unique, those are your locally developed funds, and those you will have to do a custom fund in Gateway because they're not going to be in that standard. Okay. There were some special cases this year that I want to go over a little bit. There was some confusion on the MVH. The MVH and the MVH restricted are together one fund. So the MVH restricted is a sub-fund of the MVH, but it is very important that they are shown separately on the AFR because they're tracking that information separately. So don't combine them, keep them separate. And they each have a separate fund number, and those fund numbers are standard numbers that are within Gateway. Make sure you use the MVH number, 11, I'm going to go it backwards, aren't I? So make sure you use 1176, think about it, 1176 for MVH and 1173 for MVH restricted. They're set up a little bit differently, so you want to make sure you don't cross those over again, so that when we're comparing those, we're getting the correct information. We do prepare a report for the General Assembly on the MVH, and now includes that MVH restricted. It pulls information for all 92 counties and from the cities and towns that have those funds as well, and to show the disbursements from each fund. What we found when we ran the report this year was we were missing a lot of information. So we want to make sure that we get that cleared up going forward, that we use that fund, the fund numbers correctly, and get the data in the correct fund. If you have any questions about this, or we had people call us where they might have gotten switched, flip-flopped or whatever, call Ricky and I. We'll help you get it straightened back out again so that they're we can make the corrections within Gateway to show them correctly. And we did have some that I think it was easier just to create the custom fund and move all of it there. We don't want to do that. We want to get them in those standard funds. So call us if you have any problems with that. Ricky talked about a little earlier today on the transition from local option income tax to local income tax. So we had funds for CAGIT, COIT, CEDIT, and public safety LOIT, and those all went away, and we had local income tax. So we had given you guidance that the CAGIT and COIT, which were Fund 1110 and 1121 for certified shares, were not to be used, and that money was then to be moved into your general fund. What we're seeing still is that those funds are still on your AFRs. The numbers are still available in Gateway. Part of that is oversight on our part. We wanted to keep them